Welcome to Global Risk Community Chat. Today, our guest is Richard Watts. I'm very happy to have you here today, Richard. Welcome.
Thank you very much.
Yes. So before we get into the topic, could you briefly introduce yourself to our audience?
Of course. My name is Richard Watts. I started working within the commodity trading industry just over 20 years ago, and I spent the first 7 years of my career working within rice trading companies, mainly between Asia and West Africa, which is probably the trade where anything that can go wrong will go wrong. It's very much a physical commodity. There was no hedging in the rice trading world. And then about 14 years ago, I set up my own company, HR Maritime, and I spend most of my time now giving consulting work for trading companies and also providing training courses, and so finding areas to teach people on within the world of commodity trading.
Yeah, sounds quite interesting. I hear a lot of diversity as well as a lot of expertise in various areas. So with that being said, let's then jump into the topic. I'm curious, what would you like to share with us today?
Well, really looking at the question of risk, but risk related to physical commodity trading and really the operational side of risk. And it's something that we overlook a little bit too often.
Yeah, that is actually quite true. So then let's jump into it and start with some key things when it comes to this, physical commodity.
Well, it's interesting. I mean, there are a number of different angles to look at it from. When you're talking about physical commodity trading, we're really talking about moving the goods around the world. And so we tend to get very, very, very hung up on the price risk, on the market risk, and so on hedging tools, derivative tools. But we don't necessarily spend as much time as we should really looking at the physical risk and the risk of things going wrong on a day-to-day basis. We also have to accept that the world of commodity trading is changing very, very, very rapidly at the moment. And we're seeing different changes within different areas of the business. But there are essentially three big changes that we're seeing at the moment, which are having an impact on the way that companies are handling this operational risk. And so the first is a question of size. Commodity trading companies are getting larger. And this has been going on for quite a few years now. We're seeing a lot of consolidation, and we see the companies getting bigger because as they are bigger, it's easier for them to handle the business. They have easier access to financing. They have the economies of scale. And so then they can increase the scale of the business that they're doing on a day-to-day basis. If we look at rice, for example, rice, when I was working in rice, the biggest rice trading company in the world was handling 1 million tons a year. And there were a couple of companies in the same kind of scale, the same kind of range, and then a number of companies going all the way down the range. If you look at the rice trading world now, there are two companies which are trading over 2.5 million tons. And so that's Olam plus Dreyfus. And the next biggest is about 500,000 tons. So we've had a real separation between the big and the medium have disappeared from the market. And we see this across a lot of different commodities. And certainly the way that operations is handled on a day-to-day basis and the way that risk is managed, this is having an impact as well. We're also seeing the vertical integration, the fact that trading used to be from free on board up until cost insurance freight. So it's basically the maritime part of the trade business we were dealing with. Now more and more we're seeing trading companies moving in to the origination of the product into the distribution at the destination of the product. And so this is different types of risk again. It's not just handling what's happening on board of the vessel, it's handling what's happening in warehouses, what's happening in distribution chains around the world. And so you end up being subject to a lot more different types of regulations. Then we also see a massive shift of the types of companies which are involved in our business, because before we used to have quite a clear separation of who was doing what. And so we had the exporters who were sourcing the cargo, they would bring the cargo to the load port. Then you'd have the commodity trading companies who would basically be handling the cargo from FOB up until CIF. And then you would have the importers who would be then distributing the cargo locally. Whereas now more and more you see a blurring of these lines. You see the exporters which are coming into the trading sphere. You see the importers coming in as well. And so a lot of big companies that we talk about SOCAR, the state oil company, the Azerbaijan Republic, used to be an FOB exporter. Now they've turned into being a FOB exporter, a trading company, and an importer because they bought a chain of petrol stations in Switzerland. And you see this across the board. You see companies like Albion, which is a joint venture between Copper-Sucre, the biggest sugar exporter, and Cargill, the biggest trading company in agricultural commodities. You see a lot of different companies moving into this space at the moment. And so this is having an impact on the way that companies handle their day-to-day operations. So in terms of operational risk itself, I mean, we're looking at a number of different aspects. We start off looking at the contract and the importance of the contract being well worded, the clauses actually making sense, and people thinking out what are the potential consequences of this. I was sitting at a conference a couple of years ago, and a lawyer stood up to give a presentation, and he said that the most important clause in a contract is the law and arbitration clause. And I remember sitting there saying, well, you would say that, you're a lawyer. But then when you stop to think about it, that's the clause that's going to decide everything else. That's the clause that's going to decide any disputes. And so if that clause is badly worded, then you're in trouble from the start. If you are subject to a jurisdiction which doesn't have a fair legal system, what are you going to do? If you're working with a clause that doesn't actually say where is the jurisdiction, then the two parties are going to go jurisdiction shopping and basically say, oh, I want to use this jurisdiction or that jurisdiction. And so it ends up being very, very, very complicated. And it's just a question in the contract of saying, okay, what do we actually want? And let's not leave things for the arbitrator or the judge to decide what we actually meant. But then it's moving forward and it's actually saying, okay, from an operational point of view, how do we handle things on a day-to-day basis? It's all about being organized. It's all about being structured. It's all about thinking about things in advance, and then we can avoid most of the risks. It's interesting because you look at operations, and sometimes you have operators who are always, always disturbed on weekends. But then you have others who are not, because they're planned in advance, because they say, if this happens, this is what we do. If this happens, then this is how we handle it. And so it's just a question of thinking in advance and being prepared for these things. And when we're discussing with the other parties, if we're handling things like inspection, then this is very important, but we have to look at what do we actually want the inspection company to do? What do we expect the inspection company to know? They don't know our job. They haven't done our job. They know how to inspect a cargo, but they don't know all of our problems related to the shipping, related to the contract, related to the insurance, related to the financing. And these are things that, from the trading company point of view, we need to manage these things very, very well ourselves. And so as you go through the whole list of things within the trading company, in order to manage the risk, you move on, you say the documentation risk. We deal with letters of credit on a daily basis. Letters of credit for years used to be the principal form of securing a payment. I understand that latest figures say about 50% of, if not more, of all document presentations under letters of credit are discrepant. So you've taken this amazingly secure guarantee, which is issued by a bank, and as soon as you issue discrepant documents, then your guarantee has gone out the window. It is utterly worthless. And so basically we're just moving into a situation where if we're not careful with the documents, we end up with a guarantee that doesn't work, and we have a payment mechanism which is no use to us at all. And it just ends up being very cumbersome and very expensive. So it's important for the documents to be very, very, very well laid out, to be thought about in advance, and make sure that they actually comply to the terms of the letter of credit. And then we move on. I mean, one of the large parts of our business is chartering. And so basically chartering good vessels, we need to make sure that the charter party is correct. We need to make sure that works clearly. And so all of the different aspects of the trading operations need to be thought about. They need to be looked at carefully, and we need to analyze all of the different risks. That applies to insurance, it applies to finance, it applies to legal as well. We're looking at this from different points of view. We're looking from the trader's point of view, the shipper's point of view, the exporters, the importer's point of view. And it's all about how do we improve things going forward? How do we make things run smoothly? And we can use different systems. We have to combine expert knowledge from different areas, but we can't have a program which is going to basically solve every problem. We need to have experts in the field who can use programs to make their job work easier, make their job more fluid, but they still need to know exactly what's going on and be able to handle problems. Big subject, so a lot of things to cover.
Yes, exactly. I hear it. And I actually come from a law, or like particularly maritime and transport background. So for me, this was also personally very relevant. And I hear a lot of similarities in what you mentioned or that lawyer mentioned, and also what I have experienced as well. But we are running out of time, so I want to finish off with one last question, and that is, you, I think, already kind of shared it, but if you were to do one takeaway, which is, like maybe like a sentence long takeaway, what would it be? Because of course you gave a lot of takeaways, but
The future is going to be very, very exciting, and I think there's an awful lot of opportunity to come.
Yes, good to hear. Well, with that last part, then unfortunately we are kind of out of our time. So I want to thank you so much for sharing your insight. I think it was full with a lot of information, a lot of insight, experience, a lot of things to think about. So yeah, thank you so much for joining us today. And yeah,
My pleasure to be with you. Thank you.
thank you.